management of Mangalore Chemicals. That's Deepak Anand, the Managing Director of Mangalore Chemicals and Fertilizers, joins us on the phone line. Mr. Anand, thank you very much for joining us. Well, actually, I have not quite understood your expenses list. Because of the fall in expenses, your EBITDA has jumped up remarkably. It's a very good set of numbers at the EBITDA level. But what went different at the expenses level? You have something called other expenses, which appears to have fallen from 137 crores to 110 crores. That appears to have helped you a lot. As well, purchases of stock in trade. What went right at the expense level?
No, well, the expense level is basically, in the quarter last year, same quarter last year, we had to take a very heavy hit on mark-to-market because we had a large open exposure on export.
Okay.
And this year, thanks to the rupee's stability, we haven't had to take, that kind of mark-to-market loss. So that is one reason for the good performance. And the other is, of course, that during the quarter, our urea production was running at full capacity, so it was higher and running very efficiently.
Okay.
That is the basic reason why our profitability in this quarter is so much better than the corresponding period last year.
So this purchases of stock in trade, which has fallen from 416 crore to 236 crore, that is the one that almost 190 crore has benefited you.
That is really a mix of operations and the timing of this thing. But the bottom line is, it is this mark-to-market losses which did not exist, and the urea operation running very well and at full volume, maximum volume.
Okay. No, what I'm trying to find out is, therefore we can't expect this as a recurring performance. Your costs will stabilize at these levels.
Yes, that is correct.
Okay, Mr. Anand, hi, good morning. So, the follow-up in that case would be, can you sustain this run rate of, say, 35 to 40 crore profit? Because rupee has been stable now for some time. And, if you could tell us in terms of the demand-supply environment as well, if this kind of performance can be repeated over the next 3 or 4 quarters.
Well, in terms of demand-supply, as you know, fertilizer is largely subject to the weather gods. But hopefully, this Rabi season is going to be very good. And I think the last quarter of this year should also be quite good. So I don't really see, as far as MCF is concerned, any demand constraints. The problem which I foresee is on the supply side. As you may have read in our declaration, our urea plant has been shut from the 1st of October and will remain shut till the government in its wisdom decides that socio-economic factors are more important than saving a little bit of subsidy. As you perhaps are aware, there are 3 companies whose urea production is shut down. That is Madras Fertilizers, PIC and ourselves. We are the only producers of urea in Tamil Nadu, Karnataka and Kerala. With the result that there was a desperate shortage of urea both in Tamil Nadu and in Karnataka during the peak season. The government, I think, had thought they would be able to import to make up the deficit. But they were unable to, with the result that the farmers suffered, and they suffered quite heavily. So, it depends on when the government, we have of course been representing very strongly to the government to allow us to resume operations on our naphtha. Because, we have converted our plant to run on gas also. But GAIL, which was supposed to provide the pipeline by end 2013, the gas connectivity hasn't done so. And therefore, we don't have any gas connectivity either in Mangalore or for MSL and SPIC.
Okay. So what is the update now? Has the government invited you to the negotiating table at all? Will you change from naphtha to some other feed at all? What is the way out of this impasse?
The way out of this impasse is either the government sees reality and acknowledges that they have been unable to supply gas. And therefore, they have to let us continue on the feedstock which we have, which is naphtha.
But they have not called you to the table? No relenting at all?
No, we have been having all kinds of discussions. However, I think there was a feeling in the government that it would be better to import, because currently, import prices of urea fluctuate considerably, but for the last few months, they've been low. So, as I said, in their wisdom, extreme wisdom, they thought it would be cheaper to import. I think they also forgot about all the constraints, infrastructural constraints at the ports, railways, etc., with the result that the farmers suffered.
You didn't produce from October 1st, you said?
Yeah, we shut down on October 1st.
So it will show up in the third quarter numbers, no?
Pardon? Yeah.
Will that show up in the third quarter numbers?
Yes, definitely.
Okay. And as a result, even margins would be hit, or margins would actually improve?
No, margins will be... if I have zero production of urea, urea is the largest fertilizer we produce. Our other business, of course, is DAP, which is running okay, and our plant nutrition and plant protection chemicals. They are doing fine. In fact, they're doing quite well.
So, at current run rate, what will your revenue be in the third quarter?
We are assessing it, but I think the revenue will definitely be affected by, say 2 months of no urea production. Assuming they let us start now by the end of this month, which would be in the region of about 300 crores.
Wow. Okay, Mr. Anand, what's the latest on the takeover battle between Deepak and Zuari?
I think my information is as good as yours. As per the public declarations, Deepak has been able to get about 32, just under 32%. And as you are aware, between UB and Zuari, the shareholding is just under 39%. And that's where the matter stands today. The management, as per the terms of agreement, as indicated in the open offer, the management will continue with UB, for the next few years.
All right. Mr. Anand, thank you very much for joining us with all those details.